Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking at a flat, a 335 sideways ABC where the low is in and we're looking for new highs. In this scenario, some charts actually wicked the low of A, which then results in a regular flat, which is a 335 ending inside the 1-to-1 to the 1.236, taken from the high to the low of A to the high of B. But there's also some charts that don't have that big wick, where this is the low over here, as on my chart is the case. It does end in the same target area, but the low of A over here has not been taken, which means that on some charts you have a regular flat where the low got taken, but on my chart, for example, the Coinbase chart, this is a running flat, which is very, very rare and something you really don't often see. But in this scenario, this has to be the low and we're looking for new highs. And if we then zoom in to this structure over here, then the most likely scenario on the lower time frames is a double 1-2. Now, in a previous video, we went over all the bullish options that we have over here. We had diagonals, regular impulsive structures, and all that stuff. And the double 1-2 is kind of like one of the most preferable options, even though this second wave one is longer in price than the first wave one. As you can see, the 1-to-1 over here got tagged, taken from the low to the high of 1 to the low of 2 to compare the length in price of the green one with the blue wave 1 over here. And the blue count is a lower degree count because the higher degree count is the green count, 1, 2, 3, 4, 5, and then inside the wave 3 you count the blue count. So it's a lower degree count, and preferably wave 1 and wave 2 of a lower degree count are both shorter in time and in price. Now this move up is shorter in time, but it's not shorter in price. Also, if we look at this wave 2, preferably it is shorter in time compared to this wave 2 over here, and that is what the vertical line on the chart symbolizes. It's a trend-based fib extension taken from the high of 1 to the low of 2 and then put it on the high of the blue 1 to compare the time of this blue wave 2 with the time of the green wave 2. And you don't want to see this one pass. That's also not common. Most common target area for this wave 2 here between the 05 and the 786, which is between 27.2k to 26.5k, which, as you can see, the 05 has already been hit. Now what you also can see is this line on the chart. There were no bullish CVDs from this low to the higher low, which is very, very interesting because usually when we talk about quite like high time frame reversals, I suppose, if you go to the 12-hour or the daily, we have a big low here when we look for upside. Then by far most commonly you want to see bullish CVD divergences, higher low in price, lower low on the CVD, but that is not the case. Also, in a double 1-2-1-2, you also preferably like to see bullish divergences between this low over here for the green wave 2 and the higher low over here for the second wave 2. But at the moment, that is not yet the case. Now, if you then zoom in to the lower structure over here, then for a bullish scenario, we want to look for a corrective structure from the high. So we have to look for a three-wave move to the downside. Now either a three-wave move can already be finished because the 05 has been hit over here, which is a target for a wave 2, and then you want to see impulsive continuation. Now at the moment you can see it all goes quite slow, because after a double 1-2, where this is the second 1-2, you're now looking for a bigger wave 3 to the upside, which means that you really want to see impulsivity move to the upside, and also you want the volume to move to the upside as well, as this should be usually the strongest, biggest wave in an impulse, which is wave 3. But in a bullish scenario, from this high, you want to see a corrective structure to the downside. Now, the most likely and highest probability scenario when we think about corrective structures is an ABC, where this is then a 5-wave A, a short B, and then you have over here a wave C, which either is some sort of a diagonal structure like this, or an impulsive structure where this is then a wave 1, 2, 3, 4 and a wave 5 in C. So this is your wave 2 over here, this is your wave 4, so very long wave 4, and it just does not look as nice as the potential diagonal scenario in this wave C. But then of course again you want to see impulsivity to the upside, so a potential scenario here is that this ABC is then only the first structure to the downside in a wave W, then we're looking for a wave X and then eventually a wave Y. And we do have some resistance above price at the moment over here, the daily at 28k, daily naked point of control at 28.3k, which is definitely interesting and an area of interest to observe the reaction for potentially a move towards the downside. If we then zoom out and go back to the 12-hour time frame, then the bearish scenario over here is an ABC to the downside, a 535 for lower prices to come. In this scenario, we then have over here wave A looking for B, looking for C to the downside, where this double bottom over here will be taken at 24.7k. And this is not only a double bottom, which is like a magnet for price, but as mentioned before, this low over here has already been taken with other charts. For example, Bybit with a wick to 23.6k, and it is actually quite rare to not fill that wick, and it's also rare based on probabilities and statistics I recorded in the past that if a chart takes this low over here, that other charts do not follow. That's something you don't see very often. It's by far most common that other charts will also take that same low, which then also increases the probabilities at the moment for a scenario still looking for downside. So in this scenario for an ABC looking for a 535, the 05 is a fine target for a wave B, but also the golden pocket and the 786. And if we look at that golden pocket area, you can see I do have some additional resistance in that particular area in case price moves above this high. This target box here between 29.1, 29.4, and just above in the 29.7 area, there is a little bit of more resistance. Now that means that for this wave B, we are going to be looking for a three-wave structure to the upside, and then over here an ABC structure. So we have a wave A, we have a wave B, looking for a wave C, potentially the end then over here between the 1 and the 1.236, taken from the low to the high of A to the low of B. And as you can see, the 1.236 is still in confluence with that target box over here, just below the golden pocket, which is sitting here. So that is still interesting. And the rare target for a wave C is the 1.618 all the way here at 30.1k. But in this scenario, you're looking for a three-wave structure for eventually more downside. Now, if this is the high and the end of your wave C, which, like, if we look at how the structures have formed, is probably preferred. So, preferably you don't see this one taken. But then we are looking here for an impulsive structure to the downside. So if we then jump to the lower time frame, and we open one of the impulses over here, then this impulse has the highest probability from an impulse point of view, because there's a lot of ways you can try to count this as an impulse, but there's a lot of invalidation. So here it's 1, 2, 3, 4 and an extended fifth, but there is overlap between the low of 1 and the high of 4. These wicks have overlap with this little wick, and that's actually not what you want to see in a wave 5. However, you can't really count this as a 1, 2 and then a 3, 4, 5 because of the overlap here inside of a wave 3. And the other ways, as mentioned in a video yesterday, don't really work. So this is like the highest probability scenario, I suppose, for the bearish scenario, where you're then looking for this to be a wave 1, looking for a wave 2, and then a bigger 3 towards the downside. And just like with the micro bearish scenario, you could then be looking for a move like this. However, the main difference is going to be this move to the downside. In a wave 3, this is of course a strong impulsive wave to the structure, and in potentially a wave Y, you want to see a three-wave structure to the downside. Now, if we then look at the CVD divergences, then over here, if I zoom out a little bit, you can see the green line and the red line. The green line are bullish CVD divergences between this low and the higher low. It has to be said that these bullish CVD divergences are with one pivot on the left and one pivot on the right of the newest high. And preferably you use CVD divergences on the right side of a new high or low. So you'd only be looking at this area over here, which means that if price over here with these bearish CVD divergences can actually get the CVD divergences with the high, not the in-between high, but with the high, and then create bearish CVD divergences, those are more like important. Those are, or get a higher priority compared to the bullish CVD divergences. So now you can see over here a high, lower high on price, but we do have a higher high on the CVD line on this chart over here, which you can see on yellow. So if we go to this pivot, we move to the downside to the yellow line, and you look to the right, then you can see that my horizontal cursor line, right, has been tagged by the high on the right side over here. So there's a bearish CVD divergence, but it's with this in-between high. Preferably you have a divergence with this one over here, so price finds a little bit more upside, which is interesting as it then can potentially go to that daily or the daily naked point of control. And then what might happen is this bearish CVD divergence is going to move to the upside, to the higher or lower high, but then a higher high here more locally, and then look for a potential reversal to the downside. Now, if we then think about the probabilities of the different scenarios, then on the medium time frame, the probabilities are still higher for price to go towards the downside. But I wrote something important here. If price can flip the 29K to support, which also includes the rare target for a wave C, then probabilities can change. On the low time frame over here, the highest probability scenario is a corrective scenario, mainly because in a double 1-2, the second wave 1 is longer in price than the first wave 1, which is not really what you want to see. And on the micro, I'm actually pretty neutral. I'm just waiting for potentially the reaction at the daily naked point of control. If we get there, right, and potentially look at those bearish CVD divergences for possibly a bit of a bigger wave and move towards the downside, looking for support towards the downside as well. Now, observe that reaction, trade safe today, and I hope to see you at the next one. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.